Am I okay to sit here?
Yeah, please do. Go ahead. Yeah.
You want to take anyone's seat?
Yeah. All right, so we're going to go ahead and get started. Those of you that are following us online, thank you so much. I really appreciate you joining us here today. My name is Jordan Van Camp, and I'll be going over a buyer's education class. So let me go ahead and share my screen here. Cool. So real quickly, the whole point of this class is to, just kind of educate buyers on some of the different programs that are available, different types of loans that are available, as well as just kind of general information about the process and what to expect. So, Nikki, if you have any questions at all, please don't hesitate to let me know,
Okay.
And we'll kind of pause at the end and go over some stuff too if you want. Cool. So we'll get started. Again, my name is Jordan Van Camp. I'm with Universal Lending, and I've been with Universal Lending for almost a year now. And I love this program. Now, one of the biggest things that you need to be aware of is buying a house is a life-changing experience. It can be a really fun process, but it can also be a bit daunting and scary. So that's why we are here, to help walk you through the process and help get you some information that you need. A couple of things that we're going to go over today. We're going to go over different loan types, the down payment assistance programs that are available, 6 major factors that we're going to look for in the loan process, as well as the loan pre-approval process. Once we're done with that, we're actually going to go with the buying process itself. So we'll go over how to pick a realtor, how to get the pre-approval, what the MLS search is and how that works. And then we'll go through like the funnel process, looking at homes, submitting an offer, and actually going under contract and closing. Okay, cool. So a couple of different types of loans that are available. These are going to be the most common ones. You've got FHA loan. That is going to be the most common loan that especially first-time buyers or newer buyers tend to go with. The nice part about that is it's got a real low credit score for qualification of 580, 3.5% down, and it allows for a little bit higher debt-to-income ratios. One of the downsides to an FHA loan is that there is mandatory mortgage insurance, and we'll go over that, what that is in a little bit. Basically, what mortgage insurance, though, is, we'll go over it real quick, I guess. Mortgage insurance is a insurance that you're going to pay to guarantee the loan. So if for some reason you stopped making payments on the loan, we as the lender would be able to make a claim on that insurance and collect the money that you never paid us. The next type of loan is a VA. That's for veterans. Really, really popular with vets, military, active duty, retired, and honorably discharged all qualify for it. It is a 0% down option, and they have their very own exclusive underwriting and appraisal process. So they've made some improvements to that over the years. It's a lot better and easier to qualify with that than it used to be. USDA is also a very popular loan out here in Colorado. That is the United States Department of Agriculture. That is for rural properties, so kind of along the outskirts of town. Some of the mountain areas will qualify for it as well. Also a 0% down option, so that's a lot of fun. And then conventional. The conventional is more common if you've already established as a homeowner or you have really good credit and no debt. Then you'll get a conventional loan. They do have a little bit higher minimum qualifying scores, as well as lower debt-to-income ratios. So they can be a little bit more challenging to qualify for. The nice part about those, you have 3 or 5% down, depending on a couple of different factors. Mortgage insurance is not mandatory for the life of the loan like it is on an FHA. The mortgage insurance eventually will expire on a conventional loan. We'll go over a couple of different types of down payment assistance. There's several different programs out there. So as we, kind of move through the process, or you move through the process with your lender, you'll be able to get more information on exactly what is available to them. But there's kind of two different ways that they work. There's the grant program, and then there's the silent second program. The grant program basically it's free money. It's a grant. It's just given to you. For an example, one of the programs uses 3% of the loan amount, and you never have to pay it back. There's no interest, no catches or anything. However, this one does come with a little bit higher interest rate on the loan itself, on the mortgage itself. The second one is the more popular version. This is generally the one that I tend to steer my clients toward. That's a silent second. The reason I steer them to this one, a couple of different reasons. One, you get up to 4% of your loan amount. So you get a higher percentage as assistance, which is really nice, especially if you're doing like an FHA or a conventional. You can do only 3 or 3.5% down. That extra 0.5% you can use for closing costs. The silent second has 0% interest and 0 payments for the life of the loan. You never have to pay it back until you either refinance the property or sell the property and move into a different home. So that one, again, is really, really popular. It's practically free money, basically as free money gets. So that's a really, really nice program. Lenders, what are we looking for? So, and slow me down if I'm going too fast, okay? What we're looking for basically are 6 major things. We're looking at your credit, your assets, your employment and income, your debt to income ratio, the inspection of the property, and then the title or the history of the property. For credit, typically what we're looking at is, let me see, is that the next slide there? Yeah, for credit, what we're looking at is basically your ability to repay borrowed money. So the nice part about credit is as long as you borrow money and pay it back on time in full, you can really build your credit score really quickly. The downside to credit is if you make any mistakes, it can really, really hurt you. Now, a lot of people don't believe in credit. They don't want to buy anything on loan. And that can actually hurt your credit score because you have to borrow money to get a good score. Otherwise, we don't know whether or not you have the ability to repay it. So we are looking at that. There are ways to get around that. If you have some rough credit or some areas of need in that, we can actually help improve your credit scores through a couple of different programs that we use. One is it's basically credit acceptance. We essentially can take a look at what your credit scores are, put that into our system, and then that system tells us different ways that we can actually improve your scores. So that comes in really, really handy if people have some questionable issues. You're welcome, Crystal. Thank you. Sorry, I have a couple of people online. Assets. When we're looking at assets, we're looking at pretty much everything of value that you own. So we're looking at your banks, your checking and savings accounts, retirement accounts like 401ks or IRAs. We're looking at investments accounts, money markets, stocks, things like that. And we're also looking at real estate owned. So if you already own some real estate, have investment properties or anything like that, we're also going to take those into account on the value, what those are worth, how much do you owe on those? If they're rental properties, how much are you making in rent on a monthly basis? All kinds of different things. So assets are pretty much everything that you own. Then we're going to be looking at your employment and income. Basically, we just want to verify that your employment is stable, that it will continue. Same for income. We want to look at your income, make sure that it is stable, and that it will continue. Now, a lot of people, ask about, what about 2020? That year sucked for me. And that's totally okay. We get it. But basically what we're going to look at is we're going to take 2020 into consideration, but we're also going to take 2019. So we look back for 2 years. So we look at 2019, we look at 2020, and then we look at the current year to date for 2021. And we kind of compare all three to make sure that they are either growing or at minimum stable. And then we're also going to look at the debt to income ratio. The debt to income ratio is basically the difference between how much you make on a monthly basis and how much you have to pay out in debts on a monthly basis. So credit cards, car payments, school loans, all that stuff are going to be included in that. Ideally, we like to see ratios between, so there's two different ratios. I'll start there. The top ratio is going to be your housing expense. So that is only taking account the new mortgage. That's all we're looking at. The second ratio, the bottom ratio, is going to be your housing expense plus all of your other debt. So your car payments, your student loans, all that stuff. Typically, we like to see ratios around 36-45, which means 36% of your housing or of your paycheck is going toward housing. 45% of your paycheck is going toward all of your debt, including the housing. So they give you that, what is that, 9% for additional debts. However, again, there are different programs that allow for higher ratios, up to 55% for that bottom ratio. So you can theoretically, if you qualify based on several other factors, put up to 55% of your income toward all of your debt. Any questions so far? Am I going too fast? Okay. Next, we're going to look at the inspections. So there are two different types of inspections that we're going to look at. There's going to be an appraisal and there's going to be a property inspection. The property inspection is what we'll cover first. That's going to verify that the home is in good condition. They're going to look for any issues with the house. They're basically looking at the quality of the home, right? They're looking for any health and safety issues, but they're also looking at, they're checking all the outlets, making sure all the outlets work, running all the faucets, making sure the drainage works, flushing toilets, turning shower heads on, flipping all the light switches on and off, all of that. They're walking around. Most inspectors won't get on the roof, but they're gonna, do a pretty decent visual inspection of the roof. They're gonna look in the basement, make sure there's no water damage anywhere. They've got little temperature gauges that can help them with that. So this is a really, really important step in the buying process. In a really hot market like we have right now, some agents are advising their clients not to do home inspections. I think you should still do it. You can waive the inspection clause in the contract if that's what you want, but I definitely do not ever recommend skipping this step. It is really, really important to know what you're getting into, especially on an older house. Now, the inspection or this inspection is paid for out of pocket by you, by the buyer. That is not something that is covered by the seller. And it is voluntary. You don't have to do it. Some other inspections that you can do if you're concerned about it are going to be radon or like a sewer scope, mold, asbestos, things like that. Those are above and beyond the normal property inspection. The appraisal is going to be the other type of inspection that we do. Now, the vast majority of the time, the appraisal is not optional. It is required by the bank. However, there are some extenuating circumstances where the underwriting system will allow an exception and not require that. If you have a significant amount of money down and really good credit, that sort of thing, a lot of times they may not require that appraisal. So. But basically what an appraisal is looking for is the value of the home. They're going to pull a comparative market analysis or a CMA, and that is basically similar houses that match, size of that house, size, year built, area, that sort of thing of the house that you're looking at or the house that you're buying. And they're going to compare what they have recently sold for. And that basically determines the value or helps determine the value of your house. So the property inspection is looking at the quality of the home. The appraisal is going to determine the value of the home and to make sure that what you're paying for the house is equal to what the value of the house is. Now, again, in a really hot market like we have right now, there are some exceptions to that. When we do the appraisal, a lot of times what's happening right now is these houses are going for more than what they are quote unquote worth via the appraisal process. So they're selling for more than what the houses in the last 3 to 6 months have been selling for. But as we move into this market, that will even itself out, and those what we call appraisal gaps will start to come down. And so what can happen is let's say you make an offer on a house and it's $500,000, but the appraisal comes back at $450,000. That means that there's an appraisal gap of $50,000. And that can hurt a buyer, but there are some ways around that too. So on an individual basis, we can go through and I can show you different ways to cover that. But that is something just to be aware of. You can actually turn an appraisal gap to your advantage too if you do it the right way. So, title is the history of the property. This is basically going to show prove that the house has transferred from one owner to another legally, and that when you take ownership of the property, there will be no questions as to whether or not you are the true owner of that property. Very similar to like a car, where you have the title to the car. You can sign that off and give it to the new buyer. Title for a house works the same way, except that obviously we have a much longer period of history that we have to review. So they're going to go back to the dawn of time and make sure that title has been conveyed properly from owner to owner. And that does include new builds too, because obviously a new build is being built on land, and land has been there forever. So somebody owned that land before. So they're still going to make sure that the land itself was transferred properly. So title is very important no matter what year the house was built. Then we're going to go through the pre-approval process. The pre-approval process is pretty simple, pretty straightforward, and really doesn't take a whole lot of time. It is typically required before an agent will even show you houses. So before you can even start looking at houses, you are going to have to go through some type of pre-approval process. And that's really simple. You're going to start with the loan application. The loan application can be done online, in person with me, over the phone, or via our mobile app. So we have a lot of different ways for you to complete the application. Whole thing takes 15, 20 minutes. Really, really simple. That's name, address, phone number, employment information, income, all of that. We're going to pull your credit. A 3-merge mortgage credit report is pulled. So the reason that I disclaim mortgage credit report is because the scores that we look at are very different from the scores that you see on some of your credit monitoring things like Credit Karma, or the ones that you get free from your credit card company, things like that. The way those scores are set up on a different scoring platform than what mortgage is. The way that we use the credit scores to qualify is we actually use the middle score. So you'll have 3 scores, one from Equifax, TransUnion, and Experian. Generally speaking, they're all 3 different scores because they use a little bit different models for each of them. And the one that we use to qualify you is going to be that middle score. If there are more than one borrower on the loan, if there is more than one borrower on the application, then we'll use the lowest middle score of the 6 scores that are available to us. Does that make sense? And then finally, documentation. We're going to ask you to provide pay stubs, W-2s, 1099s, tax returns, bunch of other different type of documents to prove income and assets. So back in the old days, we used to do what's called stated income, meaning we asked you how much you made and you told us, and that's what we used. And that led to a lot of problems circa 2008, if you were around then. So nowadays, we do have to prove how much you make, and it is a pretty grueling process. Again, W-2s are the easiest, because you get a pay stub, and here you go. There are some things that we have to do a little bit different if you're commission paid or if you're self-employed, 1099, all that. That is a little different process. Once you get the pre-approval, now the fun part begins. You get to go shopping. The hard part is done. Again, before you go shopping, most agents now will require you to provide some type of lender letter. That lender letter is, again, it's basically us saying that we've checked your credit scores, we've checked your employment history, we've checked your income, we've checked your debt, and here's how much you can afford. And then the lender letter will help guide your real estate agent in the dollar amount that you're shopping at. So as you shop for your perfect house, how does that look? Home buying process is pretty simple. We're going to start with the buyer consultation. Again, we already covered pre-approval. Then we're going to do the MLS search, funneling it out, narrowing it down, all of that. Buyer consultation. This is a really important process. As important as getting a good lender is, it is just as important to get a good real estate agent. You need to get a real estate agent that knows the market, knows what you're looking for, is going to have open, honest feedback and communication with you, and take their time with you. So the first step is interview some real estate agents. If you already have one, great. If you don't, I'm happy to refer some out. I've got several that I work with very closely that are very good and reliable. But you're gonna ask them questions. Just, what does their process look like? How do they function and how do they work? They're gonna learn your buying goals. So you're gonna have a conversation about what your goals are ultimately. How long do you want to be in the house? What type of house? Not just what type of house you're looking for, but how long you want to be there. What is the point? What is your why? Why are you buying a house? That is such an important one that so many people overlook. The reason that somebody is buying a house can change what types of houses they're looking for, what types of loans they're looking for, lots of different things. So that is really important. They're going to provide some clarity on the process. They're going to kind of do something similar to this, walk you through the steps and how it works. Discuss your must-haves and must-have-nots. Again, sizes of the house, bedrooms, bathrooms, square footage, yards, garage size, all that. And they're going to help you become a market expert, hopefully, if they're doing their job right. Again, these are just some of the questions that they may ask. Are you looking for a move-in ready house, or are you open to a fixer-upper? If you're open to a fixer, how much fixing up do you want to do? Because that can make a huge difference. There are some houses that you can get really cheap that practically have to be torn down to bones. Other houses, fresh coat of paint and some carpet makes a huge difference. So keep that in mind. Again, must-have features. They're going to talk about, waiting versus adjusting your search criteria. If you're really specific on what you want, they're going to hopefully have that little bit difficult discussion of, look, we got to adjust what you're looking for a little bit here. We don't want to wait, and I'll go over why you don't want to wait in just a little bit, but that's a big one. And then again, how long you're going to be there, how long you think the average home buyer is. It's 7 years, I believe it is how long somebody usually stays in their house. They may give you a list, something like this, of, a lot of times they'll have like a form for you to fill out that answers a lot of those questions. But again, hopefully they also have that conversation with you in person. Again, pre-approval. The first step to buying a house is getting pre-approved, especially in a hot market right now. Agents are not going to take clients to see multiple houses until they are pre-approved. Most agents will take you to one or two because it's kind of a get to know you period. And that is important before you start, choosing an agent. So some will do that. But again, if you're really wanting to go look at houses, put in offers, you have to have that pre-approval. Once you have the pre-approval and the lender letter, you're good to go. Keep in mind too, right now in a really hot market, houses can be on the market for literally hours before they sell. And so you want to be able to have that pre-approval letter so that when you find that house, you can act on it and jump on it real quick. The MLS search. MLS is the multiple listing service. That is basically the classifieds for houses. That's where anytime a house goes up for sale with a realtor, it gets put on the MLS system and centralizes where the realtors can search for homes. A lot of times they'll set you up with some kind of portal or like a buyer portal, so you can favorite houses, you can trash houses, you can mark some as maybes. They'll set up the search based on the criteria that you've discussed. So price, location, bedroom, bathrooms, all that stuff. And then as you search, the whole point of doing it this way is to help narrow down your field of search and eliminate ones that you don't want versus trying to just find that needle in a haystack by driving around all over town. So as you start looking at houses, you'll get a better idea of what you want, what you don't want. My general, advice, and most real estate agents I think would agree. Crystal, let me know if you agree. Is that you want to have a couple of specifics that your location obviously is going to be a really important one. Bedroom number of bedrooms probably is fairly important. Number of bathrooms. And then beyond that, you want to try and leave it a little bit more open so that you can see what's available and what's out there. As you start seeing houses that are just never going to work, you can start, eliminating some of those and narrowing that down a little bit. As you're looking at homes, again, the goal is to narrow it down to like 3 to 6 top choices. The reason you don't want to go search and go look at a whole bunch of houses is because eventually they start to mill together and they all look the same. And you get, features of one house mixed up with another house, and it just becomes hard to remember what's what. So you want to try and narrow it down to 3 to 6 top choices before you actually go view houses. The more flexible you are with being able to go view houses, the better. The faster you're going to be able to look at them, the better your chances are of being able to submit offers on them. So when it does come time to shop, really try to make sure you've got some flexibility with work, evenings, mornings, middle of the day. A lot of people are working from home right now, so showings can be kind of all over the place. Some of them schedule showings only for certain days. So again, once that process starts, try and keep your schedule open a little bit so that you can go do that. It is really important that you make this a collaborative process by working with your agent. Give open and honest communication from your agent. Hopefully they're going to be willing and able to give you open and honest communication from you. If you see a house that you're like, absolutely not, no way, tell them it's okay. These real estate agents are not tied to any specific homes, right? They want to help you. Their job is to help you find the house that fits your budget. So you pull up into the driveway and you didn't like the neighborhood, or you don't like the way the front porch area looks, whatever, it just turns you off. Let them know pretty quickly. Open the door, peek inside, make sure, and then you can move on to the next house and not waste time. A lot of home buyers, we buy everything online now. I mean, you got Amazon, you got all kinds of different places that you buy stuff online. We buy practically everything there, even our groceries. But you can't buy a house online. There's a couple of major reasons that you don't want to buy a house online. One of them is going to be this one here. What does that smell? Right? Every house is a little bit different. People are a little bit different. We have dogs, we have cats, we have chickens, we have birds, we have camels. We've got all kinds of crazy stuff. So you want to know what that house looks and smells like. Couple of things. Photographers, this is a huge one. Photographers can use some wide angle lenses and some of those fisheye type lenses to make rooms look a lot bigger than they actually are. And so that is going to be important to actually look at the house so that you can see what size the rooms are, because they are going to look bigger. The house is going to look bigger online than it is in person. HDR image processing that can make an older house look brand new. Basically that it's almost like Photoshop. It retouches it and like cleans up the images to make them look better. So flaws on the walls, stains in the carpets, things like that, you're not going to be able to see online. And again, everything online is designed to make it look perfect, right? They want it to look really good. So that's why it's so important to go to the houses and actually look at them in person. One other thing is it's really smart to hang out in the neighborhood for a little while. My wife and I had an experience actually recently where we were looking at a house that was near a train track. And we were thinking, it's probably not that loud. And we hung out in the neighborhood a while, and the train went by, and holy cow, the ground literally shook. So you definitely want to make sure that you hang out in the neighborhood. Try to go back to the neighborhood during certain times of day too. Go on a Friday night or a Saturday night. Are there big parties happening? Is it super loud? Is that going to bother you? Go in the middle of the day. Go during rush hour. Get over there before rush hour and leave and make your commute to work if you drive. See what that commute is going to be like. So lots of research goes a long way. Next step, once you find the house, is going to be submitting the offer. You're going to basically write the offer. The nice part about writing an offer on a real estate property is practically everything is negotiable. The price is negotiable. A lot of times features of the home are negotiable, like washer and dryer, if it has a jacuzzi outside, if there's a billiard table or a pool table in there, you can negotiate a lot of that stuff into your contract if you want. Again, your real estate agent will provide a CMA or comparative market analysis to help you determine your price. So they're going to pull up all the recent sold similar homes in that area, and that will help you determine what your offer price is going to be. There's going to be 3 outcomes when you submit an offer. There's going to be, it's either going to get accepted, it's going to expire or get declined, or you're going to get a counter offer. Yes, we'll take your offer, but you got to change 1 or 2 things on this. So those are the 3 outcomes. Once it's accepted, it's considered fully executed when everybody signs the contract. So if, let's say, they make a counter offer and you decide to accept the counter offer, as soon as you sign that counter offer as accepted, it then becomes a purchase contract and no longer just an offer form. Once it is accepted, you will need to turn over your earnest money deposit. An earnest money deposit is basically just a good faith payment saying that you are serious about buying the house. It's typically 1 to 2% of the purchase price and is usually due 1 to 3 business days after the contract is accepted. The earnest money deposit is considered a deposit for a certain time period. And then after that time period, it becomes non-refundable. So there's a bit of a time period where you'll have some inspection time and the appraisal and that sort of stuff. So make sure you're talking with your real estate agent on that before you actually determine when, so that you know exactly when that becomes non-refundable, just in case something happens to the loan or to the property that you no longer want. Again, kind of the steps of the process. You're going to submit your earnest money that proves you're serious about the offer. You're going to do the home inspection. That is the professional property inspector that you are going to hire and pay for on your own. If you need referrals, your real estate agent will have referrals to good inspectors usually. Then we're going to order the appraisal. As soon as I receive the contract, I order the appraisal right away because I want to get it into the system and get it accepted because there are a limited number of appraisers. And so it can take some time sometimes before that actually gets done. However, I don't typically schedule the actual appraisal until after your inspection is done. Now, the reason that I don't do that is because if you run the inspection on the property and you find like several things that you are just absolutely not okay with and no longer want the property, once the appraisal is done, that money becomes non-refundable. So I don't want you to waste your money if you're not going to get the property. So we'll order it right away. However, we usually won't schedule it until after the inspection. That is why it is so important to get that inspection scheduled right away and as soon as possible. The seller's property disclosure. They are going to issue you a form from the seller that is all the material known defects that the seller is aware of on the property. They are only responsible for the things that they know. So if there's something that happened to the property without their knowledge or before they bought the property or whatever, they are not required to disclose that. And hopefully, again, the home inspector will find any major issues. So once you get the property disclosure from the seller, there's no big surprises there. Clear title. The title company is going to review the home's owner history, make sure that the person who is claiming to sell the property is actually the owner and is legally allowed to sell the property. Believe it or not, that does happen sometimes. Final changes. Sometimes throughout this process, especially the home inspection, you might find some issues that you want fixed, and you reach out to the seller and say, hey, I'd like these issues fixed. And if they accept that, you guys will sign up basically an amendment to the contract stating that they will go ahead and fix these items. So you'll do any final changes to the contract. You will also, as soon as I receive the contract, I'll also be asking you for any final supporting documents that I need. That'll be updated pay stubs if it's been a while since we checked on the pay stubs. There'll be updated bank statements if it's been a while, a bunch of other different things. So we're going to do final loan documents there. We're going to go into underwriting and they're going to verify everything. They're going to verify your employment, your income. They're going to make sure that the way I calculate it all matches and that we all fit within the ratios that are allowed by the underwriting system and all of that. Then we're going to schedule closing. Once we get kind of through the loan document process and underwriting, toward the end of that time period, we're going to schedule the closing. And that's the day that you're going to go in. That's closing day. So you're going to go in, you're going to sign all your paperwork. You're going to sign the transfer of the ownership over to you. You're going to sign your note, which is your promise to repay the mortgage. And hand is probably going to cramp because it's a lot of signatures, lots of disclosures, lots of signatures, stack of papers, probably 2 inches high. So a lot of fun that day. But the best part about that is you're also going to get your keys. You are now a homeowner. Next day is moving day. You get to move in. It is your house. You're a homeowner. No going back now. There's no cooling off period in the state of Colorado for buying a house. Once you sign those final documents, it is yours. You are done. But you get to move in. You get to have a housewarming party. You get to invite Jordan to it. You get to have all kinds of fun. Some of the fees that are associated with home buying. So these are going to be some of the out-of-pocket costs to you as a buyer. First one is a down payment. Obviously, that amount is going to vary based on how much you have available, needs, all kinds of different things. So we'll discuss that in our one-on-one sessions. The earnest money, again, 1% to 2% of the purchase price. So you will need to have that ready to go before you start shopping. Put that into a separate, checking or savings account. Just make sure that it's available. The home inspection, that's the property inspection, the quality inspection. That typically ranges $500 to $800 depending on the size of the house and the inspector. Environmental testing, that's separate from the regular inspection. Prices vary on that. Appraisal, again, $500 to $800 depending on the location, size of the house, etc. It can even be more than $800. Again, it just kind of depends on a bunch of different scenarios. That again is scheduled for after your inspection. And then your closing costs. Closing costs are it's a very broad term to discuss a lot of different things. Closing costs, give or take, are roughly 3% of the purchase price. Again, that can vary, but it usually will include any points. Points are like an upfront fee that you could pay to get a lower interest rate. And again, we'll dig into that in our one-on-one sessions to find out whether or not it's worth it. Title insurance, that's the insurance for the property itself. Again, for the history of the property to make sure that ownership of the property has been conveyed properly over the years. Prepaid for homeowners insurance and property taxes. You are going to pay for 1 year up front of homeowners insurance and your property taxes. So that will be collected at the beginning. Administrative processing fees, recording fees to record the deed with the state of Colorado, and then just other miscellaneous fees. So a lot of different things in there. Anytime we get into that part of the process, I have several loan estimates and closing cost disclosures or closing disclosures that we can go over that breaks those fees down line item by line item. So we can go over those on an individual basis. Final days in closing. So you've gone through the underwriting process. You've done your inspections. We've got the appraisal done. You're going to be issued eventually a clear to close. That is basically when the underwriting, the people that are verifying everything matches. They're going to say, yep, you're clear to close. You are fully approved. There's nothing else holding you back at this point. That is a really, really fun email to get. That means you're done. You can stop worrying about it. You'll have a lot of feelings up until you get this. As soon as you get this, big sigh of relief. Now, I will say this does not mean you get to go out and buy a bunch of new furniture. All that means is that the loan is officially approved. We don't go buy furniture until you get the keys. Pre-closing, this is going to happen a couple of days before you actually sign the closing documents. That's going to be when you set up your wire transfer for your closing costs or for your down payment. Now, we generally prefer a wire transfer. You don't have to do a wire transfer. However, you cannot do a personal check. It has to be certified funds. So you have to do a cashier's check or some other type of certified funds, and in that case, you would bring that to closing day. And then after closing, you signed all your paperwork. They're going to make copies of it, and they're going to either email you copies or give you paper copies, or both, if that's what you prefer. So you'll get copies of everything that you signed. Good still? Cool. Real talk. This is the fun part. This part, you're going to get overwhelmed. It is a long, arduous process. Home shopping can be frustrating, especially in a really hot market. Houses are getting multiple offers right now, and it can be frustrating because you found that house and it just didn't work out. They didn't accept your offer, so now you got to do another one. I've had clients that literally have submitted offers on 8, 9, or 10 houses. And so it can be a little bit daunting. Once you finally get accepted, that's usually when the real stress begins, because that is the waiting period to find out whether or not we get final approval on the house. We're waiting for the appraisal to make sure that that comes back at the right amount. We're waiting for the property inspection to make sure the quality of the home is going to be good enough. We're waiting for the underwriting process to make sure that your income matches and your debt matches and all of that. So the nice part though is this is normal. You're going to go up and down throughout the process. There's going to be smiles, laughter, tears, crying, all of that. It is very, very normal to experience all of those things. I'm here for you through the entire process, or your lender or your real estate agent will be with you, hopefully, if they're good, through the entire process. They'll be able to hold your hand. They'll be able to calm you down. They'll inform you when you need to be informed, and they'll keep you out of it when you don't need to be informed. So that is my job. I'm very confident that when you get an offer accepted, it will be smooth sailing. There will be documents, there will be things that I have to get from you over that time period. But for the most part, as long as you've been upfront with me and I've calculated it all correctly, the documents should match everything that I've calculated. So all it is just verifications, right? So that should be an easy process if your lender did a good job first, initially. I like to go into this a little bit. This is just what makes buying a house such a singular wealth building method in the U.S. economy. Owning a home, owning real estate is the number one step in building wealth within the U.S. economy. Practically every billionaire out there started making their money in real estate. A couple of different reasons. One, it appreciates. Home prices and home values tend to go up. They kind of go up and down throughout the years, but they go up and down in an upward trend. And that means that you're creating value without even doing anything. Just over time, you're creating value and equity in the property. It's enhanced by leverage. The really nice part about buying real estate is, versus using that money to invest in some other type of market, is, let's say I've got $10,000 to invest. If I take $10,000 and give it to my financial advisor, they're going to help me grow that money. But I have to give them $10,000 up front, and they can only start growing from that $10,000. Whereas on a house, let's say I buy a $100,000 house, I have to put forward $10,000, right? But I actually own $100,000, and immediately I start making money on that $100,000. So even though you're borrowing money from a lender, you're still building wealth on the value of the home. And you haven't even spent that $100,000 yet. That's what the mortgage is. You're spending that on a monthly basis, but you're accruing value over time on that full $100,000. So that's really, it's forced savings. Again, as you pay off the loan, the balance of the loan goes down. which means you're building equity. So again, kind of a forced savings account. The less you owe in the house, the higher it's worth, the more money you've got available to you if you need it. And then there are some tax benefits as well to owning a home. You can write off lots of different parts of the buying process, as well as on an annual basis after that. Interest, closing costs, homeowners insurance, all kinds of different things. Consult your tax professional. I am not a tax professional. I make no claims to knowing anything about that. The Federal Reserve found that homeowners accumulate 40 times more net worth than renters. And I'm going to give you an example of the cost of waiting in just a second here, but they basically have shown that the average homeowner net worth was just shy of $255,000, whereas a renter, regardless of level of rent and income, so this is taking into account, lots of people renting places in really expensive areas, making a lot of money, they are still only worth about $6,200. So you can see, obviously, it is a huge factor in building wealth, retirement, all of that. Cost of waiting. This is why we encourage you not to wait to buy a house. Buy it as soon as you possibly can, regardless of what the market circumstances are. Even in a really crazy hot market right now, you want to buy as soon as you can. Why? Because homes appreciate. They don't get cheaper. You might have a crash now and then, like we did back in 2008, but guess what? All those houses that went from $800,000 houses to $200,000 houses, they're now worth $1.2 million, right? So even though they crashed, long term, they still got more value than what they crashed to. So here's a really basic example. Purchase price is $400,000. We're going to pay $5,400 out of pocket. The reason that dollar amount is so low is we're going to use some down payment assistance in this particular scenario. Okay, so we've got the down payment assistance. Your total out of pocket was $5,500. We have a loan amount of $388,000. At the end of year one, your new loan balance is going to be just shy of $380K. So you've paid off about $8,000 of the property. Okay. In that same time period, we're projecting 8% growth in the value of the property. So instead of being worth $400,000, it's now worth $432,000. So right off the bat in year one, you've made $32,000. Plus, you paid off $8,000. So you're actually $40,000 ahead of the game than you were a year ago. In 1 year, you paid yourself $40,000. Make sense? Now, just disclaimer, that 8% right now is ridiculously conservative. Year over year in Colorado, it's over 17%. So you're talking crazy jumps in value in just a year. Fast forward 5 years, your new loan balance is $345,000. So you've paid off $40,000. But the value has gone up about 35%. So now it is worth $540,000. In just 5 years, you have paid yourself $183,000. Now, let's say I want to wait 5 years because, man, this market's crazy and I just don't know if I can afford it. Let's assume you're paying $1,600 a month in rent, which is probably less than what most of us are paying, or most people are paying. But let's assume $1,600 a month in rent. We're going to raise rent by 3% each year. So you're going to pay 19, just under 20, a little over 20, and about $21,000 over 5 years. So in 5 years, you're going to pay a total of $102,000. That's how much rent, and that's the profit that you gave somebody else versus giving yourself $183K. So this is why we in the real estate market, in the real estate industry, just do not wait. It is not worth it. It doesn't work out mathematically. Again, if $400,000 is the limit of your budget right now, there's not a lot of houses in that price range, but that house is going to be worth $540,000 in 5 years. So now what do we do? Okay, so that's why we encourage you not to wait too long. Finally, this is just where I pitch myself. My clients love me. What can I say? They said nice things about me. That's it. That's pretty much everything. Any questions on anything specific that you have? No? Janelle?
I do, but I'll wait till you're done.
Okay, no problem. Megan?
No, I think I'm good. Thank you.
Cool. Well, I will go ahead and end the live stream. So those of you that joined us online, thank you so much. I really appreciate it. I will get back to you in the comments that I saw come through in a little bit. But I really do appreciate you joining us. So give me a sec, I'll kill the live stream.